All right, good evening, ladies and gentlemen, traders and investors. Alex here from MarketWise Asia. Thank you for watching this Facebook Live and YouTube live stream as well. So before I get into the session, okay, just want to say a good night to my daughter, okay? Good night, Janie. All right, so if you can hear me loud and clear, please say a hi to me in the comments and give me a like, okay? And also subscribe to our channel as well, especially if you are on YouTube. Okay, so let me take a look at the comments right now. Just now I mentioned a few highs already. Hello, Kelvin. Hello, Christina. Hello, Catherine. Hello, Bernard, Dave, Gilbert. Okay, Mark, Wylam, LW. Good to see every one of you here. So the night is just getting started. So let's wait for some more people to stream in right now. Okay, so I think for the past 1 or 2 weeks, right, has been pretty spot on, right? Okay, I'm not sure whether you remember or not. I said that market. I think that the market, again, this is just I think. Okay, I think the market will tend to gravitate higher. So as of now, the market has went up for the past 2 years. Okay, just right before the election. So right now, before I get started, right, this week until election, I'll be a little bit more careful. Okay, I'm not saying that the market will have a very sharp correction or what. Okay, but it just need to be more careful and do not aggressively long. Later I'll go into that. But I think for the past 1 to 2 weeks, I think the seasonal vantage insiders has been benefiting. At least, for me, okay, it was a pretty good 2 weeks for me so far. Okay, so let me take a look at the comments. Hello, May, Ting, okay, Ben, Hadley, okay, Kelly, okay. So let me just share my screen right now, okay. All right, so as usual, disclaimer first, whatever I share today is just for education purpose, not a recommendation to tell you what to buy or what to sell. So please do your own due diligence. As usual, the usual social media channel, please like, follow, and subscribe as well. Telegram, YouTube, Twitter, and TikTok, etc. Okay, let me just post it in the link over there. And then of course, okay, I think a lot of things I share the so-called the price mover, the market morning wrap, especially in the morning. Okay, I shared it in the Telegram channel. So this is how the Telegram channel look like. So right now we have about 6.5K there, plus minus. So you can see that a lot of information I posted on the Telegram channel, especially the updated news and also the price mover as well. So do subscribe and also follow the various social media channel. Okay. So last week, what did I say about one of the key idea? I think last week only I mentioned about one key idea. So does anyone remember what did I mention last week or not? Okay, can anybody remember? Or if you can remember, just shout it out in the chat box, whether you're on Facebook or also on YouTube. I think very few answer because most of you guys are Singaporeans are very shy one. Okay, don't like to participate one. Okay, but I think it's fine. Okay. I mentioned about Bitcoin. I think I also mentioned about the dollar index. Okay, so these two has been pretty up nicely. Okay, and later I will share with you, okay, my latest view on the Bitcoin as well, especially for those who are not insiders. Okay, how many of you are interested? If you're interested, okay, just type letter Y in the comments to just tell me that you are interested. Just type yes. Okay, if I don't get at least 10, then I'm not going to share my views on the Bitcoin today. Okay, all right. So hi, I'm Mary. Okay. All right, so let's kickstart this session right now. Oops, this is the one. Okay, so let's head over to the economic data for this week, right? So as usual, this is the calendar for this coming week, the week of the 21st of October. Oh, before I go into that, I forget, okay, just to let you know first, okay, 23rd of October, I will be away, okay, until the 1st of November, which means that next Monday, there won't be any live stream. So next Monday, there will be no live stream on Monday because I will be away from the desk, having a vacation with my family, okay? So take a break for 1 week. So I will see you after that, okay? Can, All right, so yeah, so this is the Forex factory. So for this week, 21st onwards, right? Monday today don't have anything. Tuesday don't have. Wednesday don't have. So the so-called the key news will be out on the Thursday, 8:30 p.m. There will be unemployment claims, and then the manufacturing PMI, and then the flash services PMI, which I think these news are so loud. Okay, it won't really move the market that much. Maybe the key thing will be the unemployment claims. Okay, once again, the market might move, the market might not move. Okay, once the market move, the media will try to find a reason and say that, oh, why this move because of unemployment claim and all this stuff. So we never know what could move the market. We just need to know, okay, some of the news that could potentially, okay, be market mover, right? So just be aware of all this, okay? Okay, and just to let you know, so yeah, so for the past 1 week or so, I think last, yeah, I think for a few days ago, I posted about the real estate, okay? Real estate ETF could be XLRE or IYR. I think quite a number of members actually caught it, okay? So this is the power of the seasonal trend, okay? And if you are interested, especially if you are non-insiders, okay? If you are not an insider, seasonal vantage insiders, okay? Can you just type number 1 in the comments so that I know you are non-insider, seasonal vantage insiders. Maybe you are new to MarketWise Asia, maybe you are new to me, okay? Okay, just to let you know, I do have this webinar. This is a pre-recorded webinar, but rest assured that it is still going to be very updated, okay? And it is going to be evergreen, and also the content is evergreen as well, okay? So I'll share with you how to achieve consistent trading success using seasonal trend. Okay, yeah, so don't be shy. I can see that Bino type 1. So if you are non-insiders, okay, non-seasonal vantage insiders, just type number 1 in the comments. So I have this webinar, right, pre-recorded webinar. So I'll share with you how to harness seasonal patterns for profitable trade, how to make confident decision with data-driven insights, and how to outsmart market condition with predictive strategy. So this is going to be a discovery webinar. You'll learn something new. You have some knowledge for you to take away, okay? So I'll post the link in the comments over here, okay? I'll post the link in the comments over there, okay? So once you head over to this bit.ly link / seasonal trends over there, right? Okay, so this is the webinar. So yeah, so just fill up your details, okay? And if you can watch immediately, you can do it now. If you can't, you can opt for another date or so. There are a few for you to choose. Let's say at the end of the day, you still really can't make it, okay? Not to worry, okay? There will be a replay sent to your email as well. So all you have to do is just to head over to this link, okay? And I will share with you on this webinar. We'll share with you, as I mentioned, right? Harness the seasonal pattern, make data-driven decision, and how to outsmart the market condition. So I'll post the link in this in the comments over there. So do register for this webinar. Okay, so let's head into the session proper right now. So I think for this week webinar, I talked about the description. I said about this year, it is actually the second consecutive year with a return of more than 20%. Okay, I'm not sure whether, are you surprised or not? Okay, this is the second consecutive year with a return of more than 20%. Okay, I'm not sure about you, whether can you remember what I said? I forgot. I think it's earlier this year. I think maybe January or maybe late November, December last year, okay, I said that typically when the market, okay, the S&P have a return of more than 20% in that year, okay, the next year, okay, most of the time, okay, it is not so good, okay, not so good as in, doesn't mean that it is a negative return, just that maybe not as good as a 20% return, can be like 5%, 10%, a lot of time it is less than 20%, okay. So once again, the market has proved me wrong, okay. Second year, consecutive year with a return of 20%. So this year is a fantastic year, okay. Of course, right now, we are still The year hasn't fully over yet, but right now the return, year-to-date return is about 23%, and last year also about 20+%. So this has only happened 5 times over the last 75 years. Yes, Darius said this year not yet closed. Okay, yeah. So I'm just sharing with you as of now. Okay, so far 20% it is not too bad. So we won't know. But let's say for example, okay, if this is a second year with a consecutive return of 20%, then this has only happened 5 times over the last 75 years. It is very rare. Okay, so I'm going to show you this chart right now. Okay, so this is something that is pretty interesting. So I got it from some of the sources. That's why I decided to share with you also. So because the so-called this is from Bloomberg. Okay, it shares this. Okay, S&P return. Can you see over there? The dark blue, maybe it's a bit, the color not so great, but I can see the darker shaded color here. It is the year where there is a consecutive year of more than 20% return. Of course, like Darius said, this year is not over yet, okay? But I think this year the return should be quite okay. Let's say even not 20%, right? 10% also good, okay? Okay. Let's see if there's a correction later on, but you know, so far so good. Okay, let's not jinx it yet. Okay, but you can see that 1950 a few times. Okay, then 1970s, then 1980s, then of course you realize that this is a very extraordinary years. 1, 2, 3, 4, 5. 5 years consecutively, the S&P return is more than 20% in the late 90s. Of course, what kind of period was that? That was the dot-com bubble, right? Okay, that was the dot-com bubble. So this is how bubbles were for every year, every single year, more than 20%. Of course, eventually the market suffered a very huge drawdown for the next 3 years or so. Then subsequently, okay, you can see that, you know, quite a number of years is actually 20%, 20%, 20%. So the red horizontal dotted line here is the 20% mark, okay? And there's nothing magical about 20%. It's just that typically, you know, 20%, like something that is so-called a pretty good year. Anything that's more than 20%, it's just like whether the S&P is in a bear market, people also use the 20% mark as a whether the market has gone into a bear market also. So 20% is just an arbitrary number, okay? Nothing scientific, but just a number for people to have a guideline. Okay, so 20%, I can see that a lot of times 20%, but typically next year it is still positive, but not as good as the 20% year. 20% next year still positive, but not as good as 20%. Okay, so for this year, only 5th time it happened. And do you realize something? Okay, the market, is it mostly positive or is it mostly negative during the year? Okay, the S&P 500 since 1950. So for the past 73 years. So if you think the market is generally positive, okay, just type up. If you think that most of the time it is negative, just type down. Okay, I think you guys should know the answer. I'm just looking for some participation. Is it up or down? Just based on this chart alone, this bar chart, it is quite obvious, right? Most of the time, it is all towards the positive side of things. It is mostly positive return, right? And below, when there's market crashes, so-called crashes or huge correction, not there will be years like that, but it is not that often. And do you realize, okay, for us, okay, let's don't talk about the 1950 lah. Okay, I believe most of people who are watching this are not born in 1950. Most likely you are born in 1970s or 1980s. Based on my stats from my Facebook Live, typically you are above 40, 35 to 40 plus years old. So you are most likely born in 1980s or late 1970s, like thereabout. A lot of time it went up higher, and ever since the 2000 so-called the dot-com crisis, there are only 3 times after 2004, after the dot-com crisis was over, since 2004 onwards, right? Okay, there is only 3 instances, 3 years when the market had a negative return. Of course, 2008 was the global financial crisis. Okay, the market dropped nearly about 40%, that kind. Okay, and then in 2018, less than 10%, and then of course the COVID year, 2020, not COVID year. That COVID year was positive. It's the 2022. Okay, 2 years ago when there was a so-called bear market. Okay, less than 20% also. So only 3 instances. So most of the time it is positive, it is bullish. So ever since 2011, when I am in the market, okay, every single year there will be people who say that, wow, next year the market, it is going to crash big time. This year it is different, okay, due to the, to know what, US debt printing too much money and all these things, okay. It has been saying the so-called the bear pawn. They always start to say the market is going to go down. It's more sexy okay. So this is what we call a bear pawn, okay, or the doomsayers. But so far, like especially Robert Kiyosaki, like so far every year has been positive. So you have been listening to them. You have missed like the past decade a very good return. Okay, do you agree with me or not? Okay, all right. Which industry group do they impact the S&P index more? This is definitely the tech sector because those heavy weightage one in the S&P are mostly the tech stocks. Okay, all right. So it is up. Okay, so head over there. Okay, so there are basically 3 main reasons. Of course, you know, it is the economy is definitely growing. Okay, maybe not as good as you guys might think, but it is still growing. It is still growing, and very importantly, okay, the companies profit. Okay, they are still making profit. So at the end of the day, we still need to go back to fundamentals. Okay, so the companies are still earning revenue, still making profit. Of course, in recent this year, there's a more friendly interest rate policy outlook. All these are the few key reasons that cause the market to go up in for the past 1 or 2 years or so okay. And of course, you know, back to back 20% return are actually, as I mentioned, right, it is let me take my card over there. Okay, all right. So somewhat rare. In 1950 is 2 times. Then there's 1976 to 1975 to 1976, I think. So, okay. So 1950, 2 times. 1975, 1 time, 1982. Then this tech bubble is in the late 1990s. So this is the chart that I am going to share with you. You realize this chart is actually pretty similar to the slick chart that I'm going to share with you. So if you can go to slickcharts.com, for those who have been following me, it is not something new. I mentioned that I occasionally will mention that. Okay, so you can see that the, where is it? Historical return. Is it over there? Yeah. Can you see over there? This is exactly like this chart over there, right? Okay. So you can see that 1919, where is it? How come it is gone? Just now, where is it? The S&P return, historical return. Is this one, right? Yes. Okay. So you can see over there, this is exactly what you see. So most of the time it is up. So again, this side is quite useful. Okay, you can do a lot of things. Not do a lot of things. Basically, you can see a lot of things. S&P, you know, want to see what are the companies. Okay, you can see that, you know, what is the weightage. Like just now, what Tammy is asking, right? You can see that Apple, Nvidia, Microsoft, very heavy weightage, you know, 7%, 7%, 6%, 3%. Okay, compare maybe to the last few of the, you know, S&P 500 stock. They just contribute very little only, like 0.02%, not even like 0.1%. So all these are contributing very little weight to the S&P 500. So other than that, you can see what are the weight analysis over there. You can see that, you know, just 50% of the S&P 500 stock already contribute about 60% of the weightage of the S&P 500 already. So once again, interesting side. I mentioned that before. So you've been watching, nothing new over there. Okay. So, okay. So what about three-peat? Okay, for those who are watching NBA, you know, basketball and all this, right? Three-peat means 3 times in a row, for example, 3 championship in a row. In my era, when I still watch, of course, Michael Jordan, the Chicago Bulls, they achieved the 3-peat. Okay, so what about the financial market S&P? Are there 3 times in a row or not? Okay, 3 times in a row. There is, okay, but only just 1 time in the last 75 years. Only just 1 time in the last 75 years, okay, which means that going back to this static chart over there, it is in fact not 3 times in a row, it's 5 times in a row, more than 20%. So that is the only time where the financial market have more than 20% for consecutively 3 years. That's the only time, okay, in the past 75 years. So let's say I want to ask you, next year, do you think the market can be achieve a 20% return in 2025 or not? If you think can, just type letter Y. If you think no, just type no in the comments. Next year, do you think the market S&P can achieve another more than 20% return in a year or not? Okay, I mean that there's no right or wrong, it's just for fun. Okay. All right. Personally, I think maybe hard. Okay, hard. Okay, we are not in a very bubbly stage like during the .com crisis. So, okay, that is like how bubbles were formed. Okay. And next year, again, the market could prove me wrong, but in the past 75 years, only achieved 1 time. After that, mostly just fizzle off. But it doesn't mean that the market will have a negative year. You can see over there, the market have also positive return, but typically less than that. So you can see over there, all right, so if we exclude the 90s, okay, the third year average return, it is about 6%. So there were, in fact, some years that is, in fact, after the positive 20% return, after that, not so good year, and not so good year. Like for example, in the 1970s, after 2 consecutive years, in fact, there's about negative about 5-6%. So there's in fact negative year before. Okay, so all in all, average is about 6%. So which means that next year, let's say if there is a positive return, okay, in S&P, don't expect to be more than 20%, maybe about 5% to 10%. I think you should be very happy. That is a post-election year. Okay, so based on what I'm sharing today, do you think this is something interesting to you? You know about this statistic, you know something that's interesting to you over here for today. Okay, just type N. Okay, just type new type new better. Just type new, something new to you. So if you like it, what I share today, do give me a like, share, and comments as well. Okay, do like it. Okay, do subscribe to our YouTube channel as well. Okay, today should be pretty fast. So about 26 minutes already. Okay, just nice, on track. Anyway, for those who just joined, so there are a lot more people right now. So right now we have about 130 people combined on YouTube and Facebook. So in any case, okay, if you want to watch my webinar, okay, this is how to achieve consistent trading success using seasonal trend. Okay, this is the on-demand, pre-recorded one. Okay, so I will post the link in the comments. So there'll be new things for you to take away, especially if you are new, okay, to seasonal trend. Okay, all right. Okay, so do watch the webinar over there. Okay, so let me see. So this okay. So okay. So just now I actually watched the x.com, which is Twitter. So the S&P is actually up 10 out of the past 11 months. So the bulls are definitely still in charge. So this was the stats. I took it from Twitter. I still prefer to call it Twitter. Okay, so you can see over there. So the S&P has been up for the past 10 months. Okay. Typically, okay, you can see from here, all right, higher a year later, 9 times and a very solid 14.7%. Okay, so this is another kind of stats. So next month in November, some years are not so positive, but typically 3 months, 6 months, 1 year later, most of the time it is up only in 1 year. That's in 1983. So typically, okay, it is up still positively. So even though it is 14.7%, I don't think it will be so high based on what I shared with you just now. Okay, maybe okay, let's aim between 5 to 15%. I think you should be very happy. Okay, most likely, okay, should be less than 20%. Okay, once again, this is just based on historical record. Okay, sometimes the market keep going higher, the more bearish the people become. They say, oh, the market can't sustain now. The market, the Fed just keep printing money lah. Or M2 supply just keep going high. All this. It doesn't matter. To me, it doesn't matter. As the market can keep going higher, then that is good for us. Okay, don't always be so bearish about the market. Okay, as the market keep going higher. As the market keep going high, it is a good thing. Okay, it is a good thing. Okay, and the good news is okay, even within the past 2 years or so, do you think a lot of people are very bullish about the market? Okay, what do you think? Do you think for the past 2 years, is the people or generally the traders very bullish the market compare to after pandemic 2020, especially 2020 and 2021? Okay, compare after pandemic and after the crashes in 2022. Do you think, okay, right now, are the people very bullish about the market or not? Are they like at an euphoria, okay, greedy stage or not? Okay, personally, I don't think so lah. Okay, if you use a very subjective way, I go to Twitter and such. People are still skeptical about the market. Okay, they think that market is too high, the market is going to crash, and all this, recession and all this stuff. So, judging just by this sentiment alone, okay, I think the market still have room to go higher. This is just my personal view. Okay, how high I don't know. Okay, but again, don't take me like let's say you go around. Okay, we have to see month by month, take a look, take a step at a time. But I think the market still have room to go higher. We have at least not reached the stage. Okay, like 2021. I'm not sure how many of you remember. 2021 is a little bit. It's a little bit bubbly. It's a little bit bubbly. Okay. Okay. U inversion say in a few months might change. To be honest, I think too many people are using the U inversion already. So the media keeps saying this thing a lot because quite a number of years, quite a number of time was accurate. So after that, okay, the media, everything just keep using this. Okay. After that, after a while, okay, it could be, it might not be, I don't know. Okay, but based on just sentiment alone, at least not yet for now. Okay, at least not yet for now. It's just like, okay, in the recent years, okay, everyone talk about September is going to be a very bad month. Because nowadays, recently, everybody knows that September is a very bad month. So what happened? What happened this year in November? Not in November, in September. Okay, not in September. Okay, September this year actually, it's actually a positive month. September this year, it is actually a positive month. Okay, so the more people keep talking about it, okay, then there's a very likelihood that that thing might not work so well. Okay, so just be aware of that. Again, don't come ask me or this and that. I have no idea, but I can just share what happened. So we just use this as a guideline. But I have my own opinion. Okay, my opinion might be wrong, might be right. So you just listen with a pinch of salt and make your own decision. Okay. All right. So last week, okay, I mentioned a few things. Okay, before I go into that, okay, let's head over into the S&P 500 first. So by the way, S&P 500, let's go to the cash index. Okay, do you remember last week? Okay, just before the options expiry date. Okay, I say that there could be a good chance that market can gravitate, go higher after as we head into OPEX. After the OPEX, okay, you might need to be a little bit more careful. Do you remember or not? Can you remember? You remember that? If you remember that, just type letter R in the comments. So this has worked fantastically well so far. Okay, so the market after that went higher just before OPEX. Okay, so can you see that right now this week Monday as of now the market it is going lower. The Russell 2000 is actually going down about 1.4% right now. So based on the cash index, okay, so based on the spot gamma level, the SPX 0 gamma level, okay, you can see that this intersection line, it is at roughly about 5850, 5850, okay. All right, so if price do break below 5850 as of now, I know the market right now is still young, the day hasn't over yet, okay, but as of now, has broken below 5850. So if the price really does break below 5850, okay, maybe we could expect more so-called downside to go. Downside again, it is not crash. Don't always think that downside means crash. It could be just a few days of correction or some sideways movement, that kind of thing. Okay, but do expect maybe there could be some volatility, okay, when there's more downside. Okay, 5850. This is the cash index. And just to let you know first, besides the options data, the options dealer data, okay, the positioning, based on price alone, okay, my star reversal signal has also appeared. Okay, potential star reversal signal. Once again, this potential star reversal signal doesn't mean that market has to really go down like that. It is just telling you that we might have reached a short-term peak. The peak can be again, once again, just consolidation later, or maybe just a few days of a pullback and then go higher again. Okay, it is, we won't know the magnitude. I repeat, we won't know the magnitude of the correction. It just means that maybe there could be a short-term peak. You don't know. So once again, it has shown, and the Dow Jones index, there is also a star reversal signal form. So do be a little bit more careful on that. And I think I've spoken for the past 2 weeks already, okay, regarding the seasonality during the election year. Okay, this is something that not so many people have talked about. So I'm just sharing with you over there. So can you see it worked exactly like the playbook? This was first mentioned. I told my members somewhere around in September. Okay. All right. You can see over there. The October, possibly, early October until maybe late or mid to late October, price can continue to go higher, which we have already ended here. We have finished this period already. So right now, from here until late October, okay, based on historical data for the past 13 years election cycle, this is what it does. Okay, again, it is not 包家, not 100% correct. Okay, it doesn't mean that this year is going to work out like this, but it does give us some sense of a guideline, a roadmap for you to have anticipation. Okay, you can see that maybe it could go like that. Maybe towards the end of October, price can continue to go higher just before the election day, and then after the election, maybe price can go down like that. This is what has actually happened for the past 50 years, 13 election cycle. So you can see that this period from here to here, late October to maybe mid-November, it is a bit more choppy. And if you really think that the market is going to go higher until the end of the year, then maybe mid-November onwards, maybe our price can have a better run. But as of now, this is what could happen. What could happen? So I have told my members, okay, maybe don't be too aggressively going long, okay. And so far for the past 1 or 2 weeks, okay, a lot of the trade ideas that I mentioned have so-called come to pass already. So quite a number of them have already exited as well. The members have also exited as well. Okay, so this is clear so far. So can just leave it alone, even pullback. What do you mean by leave it alone, even pullback? Do you mean by just don't do anything? I don't know what you mean by just leave it alone, even pullback. Okay, so the course of action that you could take, okay, is to maybe take a step back, don't trade anything. I think that is fine as well. You don't have to always trade. Okay, if you really want to trade something, okay, I've already mentioned that to my seasonal vantage insiders. Okay, in fact, there are two trade ideas this week. So, but at the end of the day, you can just chill and relax, because okay, from what I see from my data sheet, right, the seasonal data, even though there are quite a number of stocks, but a lot of stocks have went up already, and it doesn't fulfill my setup and my criteria. So I'm also taking a more relaxed approach toward this week as well. Okay. Can so far everything clear? Everything clear? Everything clear? Just type clear. Letter C. Clear. Okay. So let's head back to the last week. Do you remember what I mentioned about last week? Okay. So last week I do mention about this dollar index. Okay, from the 18th of October to 31st of October. Okay. How many of you actually did some forex trade based on this seasonal data over there? Okay. So dollar index last week, for the past last week, dollar index. Okay. 18 of this is since last Monday I mentioned, right? Okay. Yeah. So price also continue hit for a few days, 1, 2, 3, 4, 5. Okay. There are some profits to be made if you do a shorter term of forex trading. Okay. And then for the Bitcoin, okay, today was a sell off over there. Okay. Once again, there is a so-called a potential star reversal signal. Okay. All right. So, but when I first mentioned, it was somewhere around here. Okay. When I first mentioned, somewhere around here. Okay. Whether be you're doing a swing trade or some longer term trade, there's some alpha to be made. There's some alpha to be made. Okay. All right. This is how I use the seasonal data to my advantage. So once again, if you just watch my live stream right now, there are more than 150 people. So you can see that I have this webinar. All right. How to achieve consistent trading success using seasonal trend. I'll teach you how to harness the seasonal pattern for a more profitable trade, how to make more confident decisions with data-driven insights, and how to outsmart market condition with predictive strategy. So I'll post the link in the comments. So this is a pre-recorded webinar, but you can still choose the date that you want to attend. Yep. All right. So this is how the website look like, the webinar site look like. So, yep, simple site. Okay, you can just register for this webinar over here. Okay, so let me just post the link in the comments. And inside the webinar, I'll show you some discounted coupon code, okay, for my SVI. So you can just take a look at that. Okay, but rest assured, okay, it is not just so-called selling of things. Okay, you will learn something, especially if you are new to MarketWise Asia and myself. Okay, there'll be ideas for you to take away. There are certain stocks that I mentioned which you can still use it next year as well. So do watch the webinar as well. Okay, so just a very quick case study over here. Okay, this is the members area. So can you see that I have already actually update today. Okay, update today over there. All right. So this was what I actually mentioned last week, 14th of October over there. So I don't mind because a lot of things is already over already. So you can see over there, okay, Sankora, okay, I know a few traded, okay. I did not enter a trade, but actually my members actually enter a trade. This was actually mentioned even 1 week earlier before. So I'm just doing a recap what has actually happened to Sankora. So Sankora, I think Richard and Mary actually went inside. So CENC of Sankora, okay. Sankora, okay. Can you see over there? When I first mentioned, it was somewhere around here. When I first mentioned somewhere around here, okay, then price just go up like that. Okay, this is the power of seasonal trend. Okay, there are a few stocks that I give my members a few stocks to watch out for. Some entered, some did not. For me, I entered into other stocks. Okay, all right. So this is one example over there. So you can see over there, this Bitcoin. Okay, this is also mentioned about that. Even 1 week earlier, I also mentioned about the Bitcoin trade. Okay, so the crude oil, I also mentioned, okay, previously I said that, I shorted the crude oil as well. So you can see that crude oil, even though today is up, okay, but you can see that there was also profit to be made during the downside move. So this is crude oil, okay. When I told the members, okay, the seasonal weaker period start from around here. So so it also went down. So there are also profits to be made as well. So you can see over there. So this is the seasonal advantage. You can see over there the member success. Okay, I think Zhihao is here. Okay, he do his own homework okay, and exited MGPI with a 5R profit, which means that if you risk $1,000, he profited $5,000. Okay, all right. So this is also win, also GBCI. So for me personally, you can see quite a number of them. At least for me, okay, I said I exited my USO sell short with a 1R profit. Okay, so this is my transaction data over there. Okay, so previously, okay, the key thing I think quite a number of people actually entered was actually this real estate, which was mentioned 1 week earlier. So, I said that I mentioned this real estate and such lah. Okay. All right. So you can see that when I first mentioned, okay, for the IYR or XLRE, so this is like that. Okay. This is like that. Okay. Yep. Okay. So entered exit. So when price actually hit the CPR level, I actually tell my SDI members to actually, consider to take some profit lah, okay? We don't know what happened. If have 1R, 1.5R, 2R, better to take the profit. So today, it was in hindsight, it is a good decision, okay? So today it dropped about 2%. So it was a good decision to exit. So you can see that once again, quite a number of them, YLAM also with IYR 1.5R. Okay, so this is Chai Seng also real estate ETF, Kenny also real estate ETF, like YY is XLRE, close to how also XLRE and such. Okay, Kelvin also XLRE, quite a number of them. Richard, okay, Sankora, okay, all right, these are a number of things. So once again, if you want to know how I make use of this data, okay, and how to dish out some of these profitable trades, okay, you can actually once again repeat, okay, you can go to this webinar and go register and watch the webinar over there, okay, bit.ly/seasonaltrends.com. Okay, I'll post the link once again in the comments over there. Okay, so let me, before I end the session today, one more trade idea for you. Okay, again, I won't know whether this trade will work out or not. I'm just sharing with you the data. This is what we have in the SVI as well. Okay, I know in recent weeks or so, gold has been performing really well. Okay, really well. Okay, as of now, today actually went up. Pre-market went up quite a bit. So go up like that, go up like that. Okay, so I'm not sure whether you are very bullish or not. Okay, but I just want to share with you a data over there. Okay, you want to listen or not? Okay, if you want to listen on this data on gold, okay, just type GDX. Okay, this is gold miners. Okay, just type GDX in the comments. No 5 GDX, I won't share the data. In fact, SVI, you guys know lah. SVI, you guys know lah. Okay. Okay, I think mostly a lot of SVI members type. Okay, anyway, yeah, I'll just review lah. Okay. So for this GDX, just data. Okay, I'm not asking you to buy, long or to sell short. Just some data along. For this is the gold miner. This is the gold miner over here. This is gold miner over there. So from the 24th of October to 8th of November, for the past 11 years, okay, past 11 years, 91% of the time, okay, it went down during this period. Okay, so which means that out of the past 11 years, 10 years it went down during this period. So once again, gold, GDX, gold miners, they are closely correlated. So in fact, gold was also not so good, but I think the percentage is only about 80+%. Okay, it's also negative. So which means that the data that I show you here, 24th of October, okay, which is somewhere around here. Again, it doesn't mean that like, oh no, this is gold, GDX. I should use the GDX. So 24th of October, it doesn't mean that 24th of October price is going to go down like that. Okay, it can be, somewhere around here, price start to go down, or maybe price can continue to go higher and then go down, or maybe it doesn't even go down. Price can continue to go down here, then go up like that. Okay, we won't know. So we still have to watch the price action. So when the times come, maybe I could do an update to the SVI members. So just to share with you, like this is the web database that we have inside the SVI over there. So it was newly added. Previously, it was only just the data sheet. So now, right now, we got the web database as well. Okay, I don't mind to just show you a little bit over there. Okay, there is the bullish ETF, bullish bearish stock, bullish stocks. So let's head for the bearish ETF. Okay, bearish ETF is a GDX ma. This is ETF ma. Okay, so you can see that here. These are the bonds that, okay, maybe not so sexy for you. So there are a lot more data over there. So one key thing, good thing about this web-based database is that you can search for a lot of the things that you're looking at. For example, GDX. Okay, so it shows over here GDX. Okay, as I mentioned, right, 24th of October to 8th of November. Okay, so for the past 11 years, okay, 10 years it went down during this period. Calendar days 16 days. Average profit about 4%. Okay, so sectors under the materials, under the gold industry. Okay, clear so far? So let's say, for example, right now, maybe you have some gold position, be it swing trade or position trade, okay, and you are in maybe some good profit. Maybe you hold from here until now or hold from here until now. Maybe it's good time, okay, for you to take some profit off the table, take 1/3 off the table, take half profit, whatever it is entirely up to you. I'm just sharing with you the data over there. Okay, again, it doesn't mean that I'm asking you to short GDX or short gold. Okay, I'm just telling you that you might not short it. Okay, but at least be more careful what could happen. So at least you don't get surprised. Let's say, for example, GDX maybe somewhere drop around, starting from around here, that's to drop. At least you won't get surprised, right? Or price continue to go higher a little bit, maybe you can take some profit off the table. So this is what I'm trying to tell you. Okay, whether you want to short or what, it is up to you. Okay, again, this is just educational information. Okay, I'm just sharing with you. Okay, facts. Facts. This is quantitative data over there. It has already happened for the past 11 years. This is facts. You cannot dispute the fact that based on the data, it has happened like this. I'm just sharing with you that the future, I don't know what will happen. So this is just for educational purpose. So this is very, very important. Okay. Any questions so far? So once again, you know, know how I use the seasonal data to trade. Okay, typically every single week I will share with my members, you know, some of this data as well, and a lot of other information in the members area as well. Okay, master classes and all this you will know, okay, when you watch the video here. So once again, you can watch the webinar over there. Okay, I'll post the link in the comments in case for those who just joined. So this is the webinar. Okay, just register for the date, any of the dates, okay, and watch the webinar over there. Okay, so for HSI, once again, Melvin asked for HSI. Okay, so previously I mentioned, right, okay, not surprisingly, right, after such a huge gain, you know, there is some profit taking. Is not not surprisingly. But again, if you ask me right now whether it's good time to buy, it is a little bit more tricky lah. After a huge so-called impulse move, okay, to me for HSI, it is very hard for me to time short term right now. So longer term, okay, at least until early next year, I am still generally bullish lah. Okay, this is more for position trade. I can't tell you the short term trade. Okay, it is quite hard to tell. It is quite hard. Okay, it is quite hard. Okay. I won't share about the seasonal data over there. So if you want to share, I will share it to the members only also, okay, for Hang Seng for now, okay? So, yeah, so I think right now it's still not the best time to buy into Hang Seng, okay? All right, based on seasonal data lah. But of course, price can do anytime you want. But again, timing short term can be quite difficult because recently, you know, the candle range is very large. Up one day, up 2-3%, that kind of thing, up or down. So it's quite tough. All right. Spot gold itself, spot gold, the data also about 24th of July. Okay, thereabout. Okay, all right. Okay, so if you are not into SVI, I think you should join SVI, like, then you should know more about this data. I will share more with my members, okay? I don't think you are in SVI, is it, Joshua? All right, so Lily is asking, is Hong Kong I don't really use the ABC waveform and such, so I don't really use it, so I cannot really tell you. So if you're talking about just the standard ABC, yes, it is, but you know, whether you're going to go higher, I don't know. But right now we are still at a very crucial support area at the CPR level, central pivot range mark. So if really price do break below the 19,000 300 level, if price break below this lower range of the CPR, okay, then I will be a little bit more concerned, okay. But of course, we are also approaching towards the end of the month already. So let's see the developing central pivot range. Where is the CPR right now? Okay. So right now, okay, can you see that because the month hasn't over yet, it's not over yet, but the developing as price, you know, making new price every single day. What is the next month CPR? So you can see that the next month CPR as of now, it is like that, okay, which means that, okay, if price don't change right now until the end of the month, then right now price is below the CPR. So once again, use the CPR as a very good gauge whether price is in uptrend or in the downtrend. Okay, as of now, this month it is still supported by CPR. But if you're talking about next month, then we are below the CPR. So, but let's take it one day at a time now, okay? We are still at a key support area at the pivot point. So just assume that the uptrend, it is still intact. Okay? Any other questions so far? Any other questions so far? So all in all, okay, so let's see the market today. Yeah, market is down quite a bit today. So back to the seasonal chart over there. Is it over there? This one, okay? So market could be a little bit more choppy, might be a little bit more choppy. Okay? So for late October to end of November. So this is the thing. So you decide, okay, how you want to trade it. Okay. So I already tell my members how I should handle this week. Okay. Is there any event that we take note this week? I might have missed it just now. This week event actually based on the Forex Factory, nothing much for this week. Okay, only Thursday there's this unemployment claim. Other than that, not much events to be concerned of. Okay, Zihao. All right, so any other question? Okay, I don't see a lot of question right now. Just nice, also about 1 hour. So if you enjoyed the sharing today, if you find value, okay, you enjoyed it, okay, just type value in the comments. I really appreciate that. If you could also like, share, okay, on my Facebook and also on my YouTube page as well. Okay, just type letter V or value. I really appreciate it. Also, give me a like, share, and comments as well. And once again, for those who haven't joined the Seasonal Vantage Insiders, you are new to me also, okay, do go and watch the webinar, okay, over here. Seasonal data, it is the closest thing to a crystal ball already. So once again, you want to know how to use this crystal ball better, how to harness the seasonal pattern for a more profitable trade, how you can use the insights, the data-driven insights, okay, register for this webinar. And once again, how to outsmart market condition with predictive strategy. Also do register for this webinar as well. So with that, thank you so much. I've come to the end of today's session. So once again, next week, okay, next week, I repeat for those who just joined later, okay, next week, I'll be away this Wednesday onwards until 1st of November. So which means next week, I won't be having any live stream. So do take note of that, okay? So with that, thank you so much, and I will see you again when I'm back from my vacation. With that, thanks and so much, and bye-bye.